Hey everybody! Welcome to the Morning Monster. It is March 21st, 2023, 9:15-ish in the morning, 15 minutes before the market opens, and FOMC meeting starts today. So, what does that mean? Well, we're going to find out what kind of rate decision Jerome Powell and all his cronies of the Federal Open Market Committee, FOMC, what they think our economy is made of. Yeah. The boss, she bought me these new monsters. Hold it back just a little bit so you can see it. It's called the Beast. It's a hard 6% there, right there, 6% alcohol. No caffeine. I don't know how this is going to work out drinking those in the morning, but start the day with more fun, I guess, right? Anyway, yeah, so they taste pretty good, actually. Yeah. Could add some new dimension to the Morning Monster Show. Let's go ahead and get started, though. So all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results, especially if I'm going to drink more of these. This presentation here, informational, educational, and fun, is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, you got to hire and consult a financial advisor. If you want to join the team, jump in the description. We got a link for Discord. And if you're watching this and you're not a subscriber and you don't have the bell with the things, go hit that. Hit so you get notifications, because I do this every single morning. The market is open at this point. And coming up later today, 5 p.m. is 30 minutes of awesome. I take your requests for at least 30 minutes, go through whatever chart you want to look at. So we have the S&P 500 coming back up strong yesterday. Still an inside candle. That's 2 days of inside candles. Indecision. Looks like today we're going to open a little higher, actually. And look at this right here. We're poking up. So we may see a gap up today, getting back above that roadmap line. But we still need to get up above this junk right up here. That's like the main driver here. And on the S&P 500, that's like up here. Yeah, up here in this zone. Got to see a move up through there. 40.50 at least, but really confirming above 40.80-ish. And that really is about the same on ES right there, 40.81-ish. Give or take a couple points. We did do the contract rollover, so even though this is a constant contract, there was a contract rollover in here. So just be cautious on that. It does cause like a 30-point discrepancy. That's why I'm always like a little bit fuzzy on these numbers, because when you use the constant contract, the contracts expire every 3 months on the futures. If you didn't know that, that's contracts for futures do expire. They have monthly ones, but for the main indexes like ES that we're using here, it's basically every 3 months. That's why you'll see different series. If you actually go into your broker platform, you'll see like ESH. H was the March contract. Now you'll see M, which M is the June contract. And then you've got X and Z, and just a whole variety of letters that don't really make sense unless you're into the future stuff. So let's go ahead and continue on down the list. What I wanted to talk about, though, before we jump into the list, just thinking about it, the market is dropping for the interest rates. The blue line here, DGS2, that's the 2-year constant maturity rate for the 2-year Treasury. I mean, it's the constant maturity rate. We have dropped severely from about 4.87 down to 3.81. Now, in the history of the U.S., say the last 40 years or so, keep pulling this back here, every time we kind of cross this bridge here, we get some kind of market freak out. Happened right here, and happened here, and now we're already getting this freak out in the markets where banks are starting to fail and stuff, and we haven't even gone sideways. Usually we go sideways for 3 to 5 months ish before we get the big freak out and have to cut rates like crazy. This time we just caught the rate and we had a freak out. That may be due to the aggressive rate raising that we haven't done in a bajillion years. But right now, lots of people thinking the Fed is either going to hold or raise. That seems to be the popular consensus. But the market is tipping the hand that maybe the Fed has to cut. All right. So we see all these probabilities and estimates, but the 2-year Treasury is saying that something's up here. And I want everybody to be prepared. Like I was talking about last week, if the Fed actually does a cut, we could see like a 20% rally in the market very quickly. So just have it in the back of your mind. All right. Be prepared, as they say in my favorite charity. I wouldn't count on a rate raise. I wouldn't count on a hold and steady, and I wouldn't count on cutting rates. I think it's a little bit of a coin flip. It's a big gray area. If I was made, if a gun was held in my head and said you had to bet on it, I'd bet on holding rates steady. That's what I've been that's what I had drawn out here for months now. We'll see what happens tomorrow at 2 p.m. That's the big event, 2 p.m. tomorrow. So just remember that's hanging out here. I mean, this computer rebooted again with freaking updates. I don't know what's going on lately. Why all the updates? Windows, Microsoft. So we have coming in tomorrow at 2 p.m. We have the FOMC projections, the statement, and the Fed funds rate. And then at 2:30, our buddy Jerome Powell, who cannot resist getting up and talking, is going to get up and talk. We didn't used to have a press conference every time. It used to be only every second or third time. But lately, since he's been the head, he loves to talk every single time. So he does. And then the rest of the week, fairly benign. We got unemployment claims, new home sales, natural gas, a few other things coming in. But the main event for the week is this FOMC meeting. Like it or love it, hate it, whatever. Even though it doesn't really matter all that much in the grand scheme of things, the market sets its own rates. Lots of people believe in the news, and lots of bots trade off of that news. So just be prepared. If you're not aware, there's going to be a chaotic event in the market tomorrow afternoon. There is. Back to the charts. NQ, pushing the top of the range. If we can get a breakout here, that's going to be really pretty on the charts. I think we're going to find resistance, and unfortunately, we're coming right up into there in the FOMC, which, unfortunately, if this plays out, we may see it retrace right back, but we could also see it pop right up through this. So that's kind of the path here. Do we see it launch off, or do we see it retrace? That could be the 20% pop if we get the rate cut or something like that. And if they raise rates, we might see this retrace right here. ES could come down and retest that trend line one more time. Not what I want to see, but we could come back and retest this one more time, which would kind of bum me out. The S5FI creeping back above the 20% area. This is just stocks above the 50-day moving average on the S&P 500. There is an Indy 5FI, or Indy, however it is, Indy FI, is that right? No, in 5FI? I can't remember. I've got it on the other list. That's why I make lists. Indy FI, there it is, right there. See, NASDAQ hanging out right in the 50 area, and then Russell hanging out in the basement here at 18. So it's kind of interesting. They're right there. Southwest, cool, man. On a flight and picking it up, huh? Have fun in Louisiana. So anyway, that right there shows you the tale of three indexes. S&P kind of eking out of the bottom. NASDAQ not even really getting down to the reversal zone. And then Russell hanging out in the basement. So small caps have the opportunity to turn the corner here, but I don't know. They're still subject to a lot of these Small cap banks suffering, especially if they raise rates. This thing could plummet further. So be careful, be careful, be careful is what I've got to say. Don't try to pick bottoms. Wait for it to actually show a reversal. Dollar continuing to drift off right here. We broke through that support yesterday. This is pretty much indicating, I mean, we've kind of got this little support zone where these tails were. Right there. We found support there a few times. If we break on down through that, the 90s is probably where the dollar index is going. Now, like GC1 exclamation point is showing weakness with the dollar. This is, so everybody thinks, yeah, oh, the dollar drops, the gold spikes. Well, that's not the case the last 2 days here. So just know your parameters. You know, correlations, not necessarily causations. The dollar dropping doesn't necessarily make gold rise, doesn't necessarily make copper rise. Even though it makes those commodities more affordable for the rest of the world, it's not necessarily the way this works. All right, as I say, correlation is not causation. You know, something just happens to be on the same path right now, doesn't mean it's going to continue. Now, FAZ getting a nice, huge pullback this morning, big mover down. That means FAS, big mover up, nice little pop, almost $4 or $3.50 it looks like. Bitcoin still continuing to try to break out higher. And down here on the list was Ethereum, also trying to break out higher. I have a 1950 target on Ethereum. I'm going to step off temporarily if we get to that point because I do expect a pullback. On Bitcoin, my target is on up there about 30, between 32 and 34. Let's call it 33 at this point. I'm thinking we could see a rally right up there before we get that pullback. And these two are on separate paths. They don't have to fly in pattern together. They don't have to be wingmen. So just be aware, be cautious. BITO, eking up just a little bit higher in the pre-market. My short-term target on that one is right up here around 20. And then we'll probably see a pullback, and then we can get a higher extension. See, you had this was just breaking through the roadmap line. We'll probably see it retrace and retest that roadmap line at some point back over here. Probably out in the summer, maybe. You know, just based on this trajectory, may roll over, bounce, and then go. Oil, seeing a little bounce off the bottom. This is one of those I've kind of got my eye on for a reversal because we did actually get all the way down into my target zone yesterday. Nice spike down, potential reversal, but we're still stuck in this consolidation zone where we could extend one more time or even deeper down to 50 if we start breaking down out of this area. But you got tails, 1, 2, 3, 4 days of tails down in this zone, and yesterday spiking down, hitting that $65 target that I've been looking for virtually a year. I mean, I've been parroting in that for almost a year. If you hadn't heard me, I was looking for this oil to get down in this area for ever since we made this spike back here last year. I've been looking for it to finally push lower. We finally hit that target. Let's see if we can find a reversal here. If so, UCO is going to be my preferred target for this. I like this one. This ultra, it is a leveraged ultra long oil. It's kind of like partner in crime. SCO is the ultra short oil, and it's going to get hit. This one goes through a lot of reverse splits where UCO doesn't tend to reverse split. This one actually split back here because it got so high. It was 4-for-1 split and then retraced giantly. So there is opportunity for this one to outperform to the upside with that ultra leveraged long. FRC making a little bounce, not giant, and still looking pretty horrible on the chart. PACW making a little bounce, not crazy, but you know, needs to get out of the bottom here. ASML, nice potential. It looks like it's going to do this pattern right here. I mean, bounce right up there. It's kind of been on the list every morning because it keeps moving pre-market. SOXL, this one has a nice opportunity right here. It's a head and shoulders pattern, and we break above this high right back here, right there. we can see a run up into this 30 area, 30, 33. So I've got my eye on that one. Waiting, watching for these highs to get broken right around that 1850 area. Looks like market just opened. GS looking for a reversal point here. I expected it to get down in this area. It did. This is the point where we can see reversal, and it can be fast and sharp. So keep an eye on GS. If an actual reversal shows up, I'll make sure and let you know. PNC, potential finding support right there at the 1618 extension. I was expecting here. We got a little further extension down the fib ladder. Could be a reversal there. Meta, continuing its path. It's probably going to march right on up here in the coming months. Fill that gap that it did from all the way back here. A big gap down. I mean, ginormous gap down. It's going to eventually go up there and test that gap. Gush. What is this? An oil and gas 2x bull. Yeah, potential reversal on oil potentially reversing. I mean, that kind of makes sense right there. PXD also showing a little gap up. That's another oil and gas type play. ON. Breaking out potentially. This is higher than all this stuff back here. That's an earnings pop. Watch for it to reverse and retrace. If it can get continuation, that's good, but eventually it's going to run out of steam and do another retrace. So what kind of pop can we expect? 28 at the minimum, up to 33 if it really gets going here. So that's kind of the fib targets here. 28. And then the more ideal zone for a bullish move would be somewhere up in this zone before you get a pullback. We're either going to pull back here or continue up here and then get a pullback. EMPH making the little bit of pre-market news here. Just a little reversal, probably still on the path to go lower. I would watch it on that one. Tesla getting a little rally, got to get back above the roadmap line. Came down very close to the target on the retrace. Still has opportunity to go down one more time. Be careful. If the NASDAQ and everything takes a bath tomorrow on the FOMC, this one could come down and test this zone. Just like it looked like it was going to break out here and then it crushed down. Just be careful. Know your parameters. If we start breaking out above 205, we're probably going to go up and test this downtrend line. That downtrend line has been intact for a good long time. Started at the tech peak of November 21 and has just continued a relentless downtrend, and we haven't tested it since back here in September. So we're probably going to come up here and test it. We'll probably reject off of it, just like on the S&P 500 chart right here where we tested it, rejected, and then we got the strength to break through. That is the most likely pattern we're going to see on Tesla. And then even if it does break through, we're likely to come back and test it again. This is a very common breakout of the downtrend pattern right here. So that's what I kind of expect to happen on Tesla. We'll see it come up, retrace, break up, retrace, and then finally, hopefully, get away from this downtrend. And if you want to play on a leveraged type instrument with a lot lower price, TSLL has the opportunity to come back up and retest these highs from back here in February. NVIDIA also working on an extension to the target zone, but just kind of consolidating right there at the high. We need to see some more enthusiasm. It's probably not going to come into the market until after that FOMC tomorrow. Nike should have been out. Yeah, they got earnings today, it looks like. A little bit of pop pre-market. Got earnings today. Caution. If it can get above this zone right here, about 128, we could see 135, 140. That was a measured bounce setup. Looks like it might actually do it, especially if they announce good earnings tonight. ALT getting hit like crazy. I didn't pay attention to the news, but looks like some kind of diabetes safety trial thing happened for them and got smacked, like lost 50% of their value overnight. That's why I say be careful on these biotechs. And CTRN also getting hit here, apparel footwear. Beating on the top, beating on the bottom, but I assume their outlook was horrible and they kind of dropped back down into this consolidation zone right here. Look for them to hold support right in this zone and start turning positive. So that looks like, pull that out of the way. Let's see what we got here. Oh yeah, be a great spot to hold right in this zone. As soon as it gets back up here above 23, it's probably going higher than back here. All right, that's my list for the morning. My bias for the day, extreme caution. We start getting an earnest breakout, I'd still be cautious because that FOMC meeting tomorrow can change the whole game with one little announcement. So please be careful. Hope you have a great day. Remember, 5 o'clock tonight, I take your request for 30 minutes. Come join me. If you want a notification when I'm going live, hit the subscribe button, hit the bell with the notifications, turn on all notifications, and we'll see you later today. Thanks for coming, everybody. Have a great day. Stay safe out there. We'll continue the conversation in Discord. If you want to come get in on that, links in the description.